we have a wonderful panel today. Our moderator, Paritosh, he's the head of blockchain at KPMG, partner as well. I will let each panelist introduce themselves, but if you would like to...
I'm Jay Waterman from Blockstation. I'm the Chief Enterprise Architect, CTO, and co-founder. So what Blockstation does is we built an end-to-end platform to support the trading, clearing, and settlement of blockchain tokens, and we're supporting the stock exchanges, the depositories, and the broker members so that the entire ecosystem can trade in tokens the same way that they trade in securities.
Thank you. I'm Charlene Cieslik. I'm the Chief Anti-Money Laundering Officer and Chief Privacy Officer of Coinsquare. We are a digital asset trading platform offering about 8 cryptocurrencies for on-ramp and off-ramp to fiat and trading within. We're Canadian only at this point in time, but we are launching in Europe in a few weeks and beyond as the years go on.
I'm Amber Scott. I'm the founder and Chief AML Ninja at Outlier Solutions. I'm basically a big compliance geek who tries to keep people out of trouble.
I'm Grinhaus. I'm a tax lawyer by trade. I got involved in this space actually as an investor in cryptocurrencies, and then I learned about smart contracts and realized that was going to be the end of commercial lawyers. So I got more into the crypto side, structuring side, advising on a number of different token generation events or ICOs, setting up crypto investment funds. We do everything in the space pretty much. So.
And I'm Richard Carleton, the CEO of the Canadian Securities Exchange. I'm particularly delighted to be here this afternoon for 2 reasons. First one is I'm not talking about weed, although I could if you want me to. Second reason is the reason that I'm on this panel is I represent bad old Bay Street, and if the rest of the panel doesn't turn on me at some point, I'm not doing my job. Thank you.
You clearly get the award for that. Best introduction. Okay, so we have an exciting panel today. We have an exciting agenda. You're going to be hearing a lot about AML, anti-money laundering. You're going to hear a lot about STOs, ICOs, ITOs, and there's various terms nowadays that keep getting changed. We're going to start off with the panel presenting on a few questions that I'm going to ask them. We will ask that we ask the questions at the end of the session. So let's get excited, but maybe by a show of hands. Let's just go with who knows a lot about blockchain. Say blockchain is my life. Let's go with who's moderate around.
Actually, I wonder if we have one quick question. How many people actually own any crypto in this room? Good. Okay. There's your barometer.
There we go. Perfect. Okay, so why don't we start off with the basic question then? Jay, I'm going to put this to you: what is blockchain?
Thanks. So I'm sure we've all read the basic description of what the blockchain is, but I know that a lot of the times when I've done training with the regulators, they don't actually get it. So I'm just going to do an actual example where you guys are going to participate and be the blockchain. And I believe after this example, you guys are really going to understand what the blockchain really is. So I've got a $100 bill, and what I'm going to do, and definitely you're not going to be All right, so what I'd like you guys to do is I want you guys to participate. Anybody's got a pen and pad or else a notepad on their phone, you're just going to record everything that happens. And by recording that, you're going to be acting as what we call miners on the blockchain, okay? And what's special about the blockchain is that it's not just one ledger, that one centralized organization that's keeping track of this database of this information. It's distributed among all of you, okay? So what I'm going to do is I'm going to mint this $100 bill. So can just everybody write down, Jay minted the $100 bill. Okay, and I'm going to pass it on to somebody, and against my better judgment, what's your name?
Alistair McIntyre.
All right, so Jay transferred it to Alistair McIntyre for some services. And when I transferred it, what's going to happen is I'm going to broadcast that information to the blockchain so that all of you miners who are managing the ledger can record that information. Okay? So you record that, and now Alistair is going to go ahead and transfer that to somebody else. And what's your name?
Vasuta.
Vasuta. Okay, so before it actually is broadcasted to Vasuta, what's going to happen is it's going to verify that Alistair got it from Jay, and Jay minted it. Okay? Alright, and we're going to do another transfer. Vasuta, go ahead. Somebody trustworthy, please. Alright, and Vasuta transferred it to? Brand. Alright, so but before Vasuta transfers it to Brand, we're going to verify that Vasuta got it from? Alistair, and Alistair got it from? And Jay got it from? Alright, I minted it. So now what we're going to do is we're going to have a situation where Marco is going to try to spend this $100. Okay? So when Marco spends this $100, first we're going to verify. Marco got it from? No, Ram never transferred it to Marco. So now what we have is we have a disconnect. We don't have consensus in the ledger. And so even if Bram or Marco figured out how to hack the ledger and try to fork it and try to figure out how he can try to spend my money, he's not going to have enough power for the consensus. And if the blockchain is done right, where we have enough mining power and we have the right incentive mechanism, then what's going to happen is this blockchain becomes immutable. It can't be cheated, it can't be changed. Any questions? Marco.
Yeah.
Marco's a magician.
He must work for a bank because he took a huge transaction to
Give me a better one.
Sorry, no offense.
Next time he's going to do it with a loony.
It happens every time. So I made $20. That's how the blockchain works.
Thanks a lot, Jay. So, Aaron, I'm going to pose the next question to you: is how blockchain is transforming the financial services sector, and what impact do you see this having on such services over time?
Blockchain was designed to eliminate institutions, middlemen,
That didn't take long.
So if it's, I don't quite think it's reaching the point where it's doing what it was intended to do, but it is having an impact because regulators are being sheep anyways, trying to catch up. So and there's a lot of development happening with a lot of money being raised. It's raising issues. I think that's the biggest impact it's having. It's bringing issues to the forefront. It's bringing regulators' antenna up. And what remains to be seen whether adoption will actually occur.
Okay. Maybe as we go along in the session, we can actually talk about the blockchain enterprise part of how it actually is eliminating intermediaries or actually is not. But I'm going to go on to the main topic today, which is the AML. And Amber, I'm going to start off with you. Maybe you can just pass the microphone down, or the microphone down. What's the general state of AML regulation in Canada around blockchain or cryptocurrencies, and can you comment on the anticipated changes that were just recently announced by the FATF?
Sure. So right now, as far as the Canadian context goes, we're waiting. So we know what we think it's going to look like, which is that we will see companies that are dealing in digital currency, so buying, selling, trading on behalf of their customers, regulated as money service businesses. And that, I think, is to be expected. The specifics, I know that the Department of Finance has got a lot of comments, some of them from folks in this room.
You're welcome.
Thank you. And we'll see how much it looks like what the proposal was. But I think that that's relatively in line with what we're seeing from a global perspective. There certainly are conversations between countries, between OECD countries, between FATF member countries. And so I expect that those things will be relatively in line. Unfortunately, the devil is always in the details, and exactly what that looks like for compliance for each country is always slightly different. So when someone tells you they have a global compliance solution, run far, run fast.
So, I mean, the FATF sets the Financial Action Task Force, we call it the FATF in the industry. They set the global standards. It says all your countries, if you're a member of the United Nations, that you should enact laws that do these things. So the Canadian government put out laws, earlier this year? Earlier this year. Then the FATF released their statement just recently. And now we gotta see if they kind of match up. If the Canadian government kind of took it upon themselves to go a little bit further than I think most people. And a lot of our commentary has helped maybe dial some of that back a bit. Like, we don't want regulatory arbitrage here where we become the worst country to do business with because we have the strictest regulation that no other country has put into place, but we obviously don't want to leave it totally open either. Nobody wants money laundering and terrorism on their platform, so I think we can all agree to that, right?
Yes.
So maybe, Charlene, I'll stick with you as, with the proposed regulation, well, how does that impact existing crypto economy business models going forward?
Well, at Coinsquare, we are already fully compliant with existing money service business regulations. They're really not that difficult or different than what existing any financial institution covered by Proceeds of Crime Act, like know who you're doing business with, have policies and procedures. I always say have a qualified chief anti-money laundering officer like me, and but like actually be doing what you say you're doing in your policies and procedures, and to mitigate the risk of having this money laundering or terrorism on your platform, having audits to ensure that you're following those things. The crypto rules are just basically, I don't know, I think it was a bit of a lazy ad almost of like, and cryptocurrency added to the existing platform, but for a few nuanced things that people in crypto might not notice, such as extra reporting requirements or being specific on fiat on-ramps and off-ramps that with other financial institution types. So there was a lot of commentary given back on the things that went above and beyond what other countries are enacting for that.
Yeah, and I think most exchange platforms and most businesses that are in the business of buying and selling cryptocurrencies have been doing something for a long time. And if they're operating,
In varying degrees.
In varying degrees, but it's incredibly difficult to get a bank account, period. Even if you are doing all the stuff that you have to do from a compliance perspective, it's still probably the biggest barrier to entry in Canada. But it's nearly impossible to get that if you're not doing something from an anti-money laundering compliance perspective. So long before regulation, we had the banks acting as de facto regulators.
I can tell you all about that over drinks after this event.
We did agree in the room that we'd say, I take a shot there, time to say blockchain.
Yeah.
Blockchain.
Blockchain.
Let's see, why Charlene a shot at the end of this?
Yes.
So what would an entity need to do to sort of be compliant? So if you talk about the newcomers into the market, startups, what advice would you give them from a compliance perspective as a money service business or with the new proposed regulations?
FinTrack actually has really good, so it's a financial transactions analysis and report center of Canada. FinTrack, they actually have really good plain language guidance on their website for money service businesses currently. And if you're following that, you're probably going to get about 80% of the way to where you actually need to be once we have regulation. And like Charlene said, have a qualified compliance officer, so somebody who knows what they're doing. Have policies and procedures. Those are documents that say, here's the stuff we're going to do. And then actually do those things, please. Have a risk assessment. So that's a document that says, here's the risk that our business could be used to launder money or finance terrorism, and what we're doing to stop that stuff from happening. Have an AML compliance effectiveness review, which is like an audit, but for compliance. It's exactly as much fun as it sounds. As an MSP, you need to have one every 2 years. And train your people. So simply every once a year, do that refresher training so that people understand, here's the stuff that we're collecting, here's why we're collecting it, here's what we do with it. And that's it. If you can do those things, you're in a pretty good place.
I think there was just one more thing, if I could add, is that in this sort of lazy route of adding in cryptocurrency, they also added that to every other type of financial institution. Like if you're a securities dealer and you deal in cash and cryptocurrency, then you have these obligations. So it's not just firms that are like mine, like Coinsquare, cryptocurrency exchanges, trading platforms. It's other businesses that will deal in cryptocurrency. And we've done a lot of debating and discussion with the regulator about what that phrase means, dealing in, to try to make sure it doesn't accidentally capture things it shouldn't, like blockchain-specific applications that have nothing to do with fiat, on-ramps and off-ramps, gaming, everything like that. But So it's not just particular exchanges that are affected, but other companies that are doing business with.
So Aaron and Jay, cost of compliance and non-compliance obviously is going to be both expensive. How are rec tech firms helping out with this? What sort of solutions are we seeing to sort of enable firms to be compliant with these regulations?
So, I mean, there's a number of products and services that firms are coming out with, which allow you to actually analyze the blockchain so that you can see exactly where the origin of that deposit came from. Essentially, when we're working with the broker-dealers, their main concern is when the deposits come in, how do we make sure that this didn't come in from some kind of criminal activity, right? So there's very powerful algorithms that a number of companies have been creating to figure out and kind of scour the blockchain to add attributes, is what we call it, to different addresses on the blockchain. So for example, we could mark down your address and say that, okay, we know that this address is coming from this specific institution, right? But the difficulty or the limitation with it is essentially, these are algorithms which, I'm just going to give an example. We have a company in China that's analyzed videotapes, your movements, your financials, and everything in order to figure out if potentially you are going to be in this room today. But the issue is, even though that algorithm can be right sometimes, it's often going to be wrong. So what we did is we developed a software called ChainWatch, which rather than do an algorithm trying to figure out if you're in the room, we're actually here with you. So we work with the broker-dealers while we're setting up the stock exchange depository, etc., so that everybody and all the brokers' addresses are known. Now what's going to happen is when a broker receives a deposit, they actually know that this came from another broker-dealer or financial institution in my jurisdiction or in one of the trusted jurisdictions around the world that we deal with. Or on the opposite side, hey, this came from, for example, North Korea, and we know that this is a sanctioned area, so we can't take this deposit. We need to reverse this, we need to close this account. More powerful with the blockchain, though, is, let's say, for example, a deposit came from China, right? And there's no sanction on China, so that's all good. What could happen is, a couple months later, the blockchain could be updated with this information that the brokers, law enforcement, the stock exchange depository, or other people could report this information to say, hey, this address is from North Korea, and that happened to transfer that coin that went to the address in China, which came to our client. So down the line, as time goes by and the blockchain gets more and more updated, as ChainWatch gets more and more updated, what's going to happen is that information is going to be more and more available so that we can actually be preventative instead of reactive in terms of AML compliance. So if you could imagine with smart contracts, just by show of hands, how many people know what a smart contract is? Okay, cool, well, that's good. All right, so within a smart contract, we could actually define that we cannot transfer funds from a flagged address into this ecosystem of addresses, for example. So we could actually block it off in the future. So this will provide a huge amount of, I would say, proactive compliance, the ability to have transparency for the regulators who can also pierce into these kind of softwares that are offering these services to save on a lot of costs and a lot of fines.
If I could just briefly jump in. I think just to take a step back, we're talking about KYC, or know your customer obligations that we might have to identify the sources of funds and how we go about obtaining that information can come in various ways. And also there are a number of different regulators that require this information. So it's not just FinTrack, right? We're dealing with the OSC, we're dealing with accredited investors, for example. And you have the Canada Revenue Agency, and you have FinTrack, and you have the OSC, and other regulators that are involved in this space, and the left hand doesn't know what the right hand is doing. And so trying to cover all your bases by having good KYC to cover as much information as you can. Like Jay said, outsourcing it to other using outside, or rather than, if you're not an MSP or money services business, having someone on site who's performing these things is very valuable for people, for companies that are bootstrapping. You know, you start out the question, how do you get all this information and be in compliance without spending all your money right in one shot? That's what you have to be cognizant of, and unfortunately, legal advice is where all of it is.
So I know we briefly touched on this earlier, and we talked about banking. I'm going to open the questions up to you. Feel free to really answer this first. Is the lack of AML regulation right now hindering crypto businesses, especially as it relates to traditional banking? I think Charlene or Amber, you mentioned something about it.
Yeah, I mean, I have firsthand experience with that. I went through this about, 10 years ago, when the original money services businesses were the demon and the devil. That when the regulations came out, all the banks started de-risking those businesses because they didn't understand them and they were competition to them, and we're just like the latest version of that is like there's a perception, and I don't think it's reality. There's a perception that it's unregulated. I mean, at least for our exchange, we are regulated. We are a money service business. We do the same things at the fund. We are.
Exchange?
Yes. A trading platform. Trading it. Those words are really, that's semantics. We're playing semantics now.
No, they're not.
According to FinTrack. Anyway, getting a bank account is probably the biggest challenge that my company faced, and it took a very long time, and it was the main reason I was hired at Coinsquare, was that having a qualified chief anti-money laundering officer to institute the program, develop the policies and procedures, make them work, show that they're working for a period of time, and demonstrate that you're trying to do, and it's not just a bunch of words on a paper that you paid somebody to write down for you and you never follow and you don't know how to operationalize. We deal with retail level persons. We're not institutional, which is a fantastically easy KYC to do compared to retail. And being able to do this in real time on a digital platform that doesn't have human interaction, and being able to do it well and do it better than a bank does it. It's like we really had to prove ourselves in order to get the financial institution to recognize us, and for a long time they didn't really believe we existed. Like there was a lot of site visits and, oh, look at all the people working here. And yeah, we're a real business. Like we really exist. And again, I saw this 10 years ago with traditional money service businesses, and we're the ones going through it now. So it's like not having regulation gives them an idea that you're rogue and you're not following any rules and you're just out there taking advantage of people. And I don't think that's true for a lot of businesses. I think there sure is some people taking advantage of people, but you can't paint one broad brush on all of us.
If you're a crypto company and you're trying to figure out how do I hire a compliance officer, steal one from a bank. You get this level, hopefully, maybe not this level, she's very much one of a kind, but a very high level of quality person who understands compliance, and you can teach them about crypto. But get a person who really understands compliance, and if you're having trouble with banking, get a person who speaks bank, and that will help you. Because that's still a problem. We got really nerd mad on my team last summer, and we hired a researcher, and that researcher called every bank and trust company and credit union in Canada to under 3 different research conditions to say either I'm a crypto exchange who's just doing cash to Bitcoin, Bitcoin to cash, or I'm a foreign currency exchange, or I'm a remittance company doing remittance between Canada and the UK, so pretty much as vanilla as it can get. And what do I have to do to open an account? And
How many of them responded back at
a
all?
lot, a shocking lot. The data set is open source. Take it, use it, do with it whatever you wish. It's there. It's on our website. But the percentages were shockingly low, even to me. So in any research condition, less than 5% said they would open an account.
It's just really important that the financial institutions should actually be supporting any kind of blockchain cryptocurrency company, because this is essentially the future, right? And we have the fabric of the financial future that we're building out. And if in Canada, if the financial institutions are not supporting it, what's going to happen is we're going to go elsewhere and we're going to set up over there, and you're going to lose your talents, right? And the other thing is, when the financial fabric is the new fabric of the financial world, and you did not get involved because you did not support it, then you're not going to have enough fabric to cover your ass.
Did we agree on what would that be? Like,
Swearing was permitted. We
was that 2 shots for the person who swears? So can I flip the question and say, if you were a bank, what should they be looking for?
I'm not a bank.
I was a bank.
If you were a bank.
I guess I could take it. I have been on the other side as Chief Compliance Officer and Chief AML Officer of Schedule 1, 2, and 3 banks in Canada. And some banks will just be like, give me some paper and I'll throw it in a folder and we're good to go. You'll see a wide variety of that. The Big Four have a little bit of a varied process, but you want to collect the documents, read the policies and procedures of the cryptocurrency company, whether it's a trading platform or an exchange, and determine if they understood the rules and applied them appropriately to their business. Again, if they just copied a website and threw it into a bunch of Word documents, but couldn't articulate to you what it means to do KYC, what it means to do risk assessment, how it's done every day, who's trained, how often, what enhanced due diligence means, all the things that are requirements of the law. If they really can't articulate how they're achieving this in their day-to-day business practices and what controls are around it, I would question, like any business that would be regulated under these rules. If you're giving a bank account to a casino or another traditional money service business, you'd want to see the same types of things in them as a higher risk entity. So making sure they have the program in place and it's working.
Yeah, and I would add to that, talk to the compliance person. So not to Aaron, not to me, not to us external geeks, but talk to the Charlenes of the organization and see what they're actually doing and what their understanding really is.
Okay. I'm going to take it back to cryptocurrency wallets and some of the tech part of it. There's a lot of technology out there where people can trace or claim they can trace every single transaction right back, including IP addresses. What are your thoughts on this? And have any of you used it so far, and what are the results and how reliable?
Yeah, so again, the purpose of the blockchain is to make it completely transparent and traceable. This is the nature of the blockchain. And so there's a number of softwares that are out there that I have used personally in order to trace the transaction, you can say from where it is now to where it originally actually began, like when that coin was originally minted, just like in that example that we've done earlier today. Now, the difficulty with that is if you don't have enough attributes to say, well, you know what, this address belongs to this person or this institution, then the information is not as powerful. This is the limiting factor. So what is the factor that's going to ensure that you guys have all the information that you need, or the maximum amount of information that you need to make an informed decision? Is you guys have to actually get in the game, right? So when for example, the financial institutions, the broker-dealers, everybody is in the game, and therefore those addresses are available for your clients to make deposits to your accounts. Now the accounts are known. The anonymous factor is gone. We can say, hey, this account belongs to this person. So now, when an institution receives a deposit and they want to investigate it to make sure that it's compliant, they can see, oh, you know what? This came from RBC, and that RBC got this from CIBC, and CIBC got it from BMO. And 3 degrees of separation away, it all came within financial institutions, which is comforting to people like the regulators. Exactly. When we don't have that information, because you're out of the game and you're staying back, this is when we have the difficulty. So the more that you guys get in the game, the more powerful these tools are going to become.
So I'm going to shift my focus slightly onto tokens. Big word. ITOs, ICOs, a little bit. I'm going to point it back to the lawyer. I'm going to go with what are ICOs, maybe for the purpose of hopefully everybody knows what an ICO is, what are STOs, what are ITOs, and what are maybe the subtle differences between the three.
Between securities and tokens?
Sure.
For that's well, the one big difference between tokens and securities is you don't get ownership in the business when you buy tokens. Otherwise, there's a lot of similarities, and that's why there have been a lot of analogies, and that's why there's been a lot of regulation. So ICO, ITO, whatever you want to call it, is when you're trying to raise money for your business by selling a cryptographic asset, as opposed to, I guess, an imaginary computer thing as opposed to an imaginary piece of paper thing. They're just, right, so securities are just representative of your investment, and whether it's considered a security or not, we have a legal test for that, and it's just if you're putting an investment of money into common business enterprise, and there's an expectation of profit from your offering of your own. So if it meets those 4 prongs, you've met the Pacific Coast test, which is very similar to that. Well, adopted the Howey test from the US, probably familiar with. And so what the struggle has been over the last couple of years, which I think may have been resolved very recently by an SEC proclamation, what the struggle has been is, are these tokens that we're selling to raise money for the business but don't give you ownership in the business, are they actually securities? And do they require oversight by a securities regime like the OSC? And interestingly enough, the SEC came out with something very recently that talked about Ethereum, which is a very large ICO that happened in Toronto, came out of Toronto. And they said that today, because Ethereum is decentralized, there's no central governing, there's no centralized management for it, it's not a security. But at the time that it was sold and issued, when there wasn't a platform, it was a security. So that's kind of where that's what we're all focusing on now, is trying to establish decentralization and an effective platform. So the analogy, I don't want to take up too much time, but the analogy I often draw is Chuck E. Cheese tokens, which is an easy one because we all know it. You go into Chuck E. Cheese, you buy the token, you play the game, it's great. You can't go outside of Chuck E. Cheese and use the token to buy bread. You can't go outside Chuck E. Cheese and sell it for more than what you bought it for, because you can always just go back into Chuck E. Cheese and buy more tokens. But if one day some guy took a sign that said future site of Chuck E. Cheese and stood there with a bucket selling tokens for 25 cents a piece, saying that once, and by the way, I'm only selling 1,000 of these tokens. And then when it's built, I'm going to have the best video games in here, and anybody who wants to play them is going to have to use my tokens. And then it gets built, and then the guy takes the tokens, bought them, goes outside and sells them for $50, $100 each because they all want to play the games. Was it a security or was it not a security? Like, it was never intended from the person selling it. When you're selling it on an exchange, you're not really the ICO issuer doesn't sell on an exchange, right? They're selling to other people, unlike securities, which is different. An initial offering happens on an exchange. They'll sell pieces of their business on the exchange, and then they can trade them and do all kinds of interesting things with them. With an ICO, you're selling them to buyers directly who will subsequently trade them on an exchange. So everything is backwards and upside down in topsy-turvy. It's very difficult for regulators to get a handle on it. Trying to apply these old 100-year-old tests to this situation, and it's gotten a little bit convoluted.
That's a great
That's a great analogy.
Isn't that part of the problem? That a lot of people have concern that there will be a change in goalposts with respect to the OSC or regulations?
I think the rules exist. I think it's a matter of interpretation at this point.
Yeah, I mean, we know what the goalposts are, that if you issue securities to the public, you have to do so, under the authority of the Securities Act, and if you're looking to get listed on an exchange, obviously you have to meet the, the benchmarks of the exchange.
Because the question is whether it's a security or not.
Well, that's it. That's where I think there's a gray area, because you may have the
Sorry,
OSC changes.
can we leave the questions to the end because we've got lots.
Right.
I didn't mean to be rude.
He actually gave me an opportunity to talk, so.
Maybe you can go describe let's get into STOs and what are the regulatory challenges with STOs or even with token offerings. And once you answer that from an exchange perspective, how are you coping with the demand and what regular challenge you have to face with, maybe then we'll transfer it back to say what are the AML considerations and bring it back to the panel.
I told you I didn't want to talk about AML.
Well, the reality is that I don't think that there are very difficult issues posed by the securities token or the tokenized security, because as you pointed out, a security itself, is often not represented by a piece of paper anymore. It's an entry on a computer system at the Canadian Depository for Securities. So the notion of having an electronic asset that's held by clients of registered broker-dealers that's traded on an exchange, this does not present difficult issues. And to be blunt, we'd be in a position to list a tokenized security tomorrow. Now, the reason that we haven't is that none of the power of the technology that we've been talking about and all of the problems that it can solve at the exchange level, the dealer level, the issuer level, and the investor level come to the fore, or you have the opportunity to take the benefit of it until you actually have a clearing and settlement system which is linked to the trading platform. And at that point, you can then start to, and again, it's deeply unsexy back office stuff, involves margining, which we've all been dealing with through all of our careers, of course. But things like with the T+2 clearing settlement system that we presently have for securities, your dealer is required to post security, cash, treasury bills, of some kind of liquid instrument with the depository clearing system for the 2.5 days that it takes for that transaction to finish. That adds up to billions of dollars that are being posted daily that basically do nothing, because the likelihood of failure of delivery is very, very low at this point. So by using the blockchain technologies, having this securities tokenized, you can actually clear and settle instantaneously. Because again, you can reach onto the blockchain, and it's probably not going to be a public blockchain. It will be a private blockchain, which is held behind effectively the securities industry firewall. So the man has actually stolen the technology, is not proposing to create a decentralized network, but in fact will have one that's highly centralized, highly secure. And in fact, the largest financial institutions in the country have done an awful lot of thinking about this. They have invested a lot of money in terms of how to use the technology to reduce costs, reduce risk, improve customer service, and to be blunt, look at the potential competitive threats from decentralized competitors, disintermediation challenges, and so on, and make sure that 10, 15 years from now, that they're not roadkill, but in fact are part of the financial fabric.
So I did say I was going to bring it back to AML. What are the challenges from the AML perspective on exchange for listing a token of that nature? And how important is it to actually get to know the founders and who they are from an exchange perspective?
Well, we'll see again. This is standard operating procedure for us. As far as the, if you talk about the purchasers of the token, well, the AML KYC, that's all taken care of right now by the dealers. You can't open an account unless or until you've filled out that. Every time I ask it, it's more pages. It's like 100 pages or whatever it is KYC at this point. From an exchange perspective, again, we are looking at all of the companies that come to us, whether they're issuing common stock, whether it's a royalty trust unit, any kind of security that they're looking to issue. I mean, they have to pass very strict background checks and disclosure requirements that our exchange and other exchanges operating in Canada are required to perform and do in fact perform. So it's a very, very rigorous process that's involved.
Yeah, and I think, if you look at a platform like ours, a trading platform, like we're currently registered as an MSB, and that is a different definition than a securities dealer at this point in time. So when we put tokens on our platform, it wasn't put through the same, sort of rigorous process, but, to say that there's no process at all, I think is also incorrect. We do have a process for that, and we work quite closely with the securities regulators to help sort of define that we don't want to just become like another securities dealer or just become like a bank. So trying to fit this new technology in with some of the same safeguards that exist in the existing marketplace. Because again, nobody wants to take on that bad investment, that bad token, and just be responsible for distributing out. At least we don't.
Can I flip that question in a funny way?
maybe.
Bitcoin. If someone invented Bitcoin for the first time today, so pseudonymous founder, you don't know who they are, you don't know where they are, no ICO, people are using it,
Good thing I wasn't born
no
then.
foundation, nobody's in charge. Would you list it?
Well, we do list it. We do list Bitcoin. But it's a bit of like the cat's out of the bag already. So,
What if
you
there's
know,
a new thing like that?
oh, ifs and buts or soups and nuts or whatever that expression is. You know, I think you're always gonna find that technology is way faster than regulation, and it's never going to catch up. Like, anybody who's sitting around hoping like, oh, they're gonna be guiding us and helping us and like, this will help make everything clear and we'll know what we are and what we have to do, that's not gonna happen. And I don't think we've seen that in the history of banking regulation. It's not gonna change now, but I think it's up to people like my company and other companies in the field that are like trying to do the right thing, trying to get to a point of being like a 21st century financial institution, mitigate the risks, follow some of the best practices that true exchanges and financial institutions have tried and failed and tried and succeeded at for many years. Like, there's obviously lessons to be learned and better practices to be taken away, but you know, again, then we just be like another bank. So I think there's some room for improvement, development, not at the expense of due diligence. I certainly don't believe that as the chief compliance officer, chief anti-money laundering officer.
So maybe Charlene and Jay, like, is there any other considerations you need to take into account when you're doing a token offering, and how do you handle the ongoing activities subsequent to that? So sales, splits, dividends.
Yeah, so the first thing that has to be taken into consideration is the classification of the token. So is it an equity token? Is it an asset-backed token? Is it a dividend token? Is it a utility token? Is it something like Bitcoin, which is, you know, acts like a currency and is owned by nobody? So you have to take all of those into consideration first before you can evaluate it for what it is. So for example, if it was an equity token, then obviously it's going to have to be listed on a registered exchange, right? It's going to have to go through all the due diligence that a normal exchange would do. But then there's another layer on top, right? So what is that layer? We have to take into consideration what blockchain is it being put on. Is this an existing blockchain which is solid and proving and has a huge mining capacity where it's actually immutable? Or is it a private blockchain that's actually going to end up essentially being centralized? Because if it's centralized, now we have to take into consideration all of those risks associated with it potentially being hacked and changed, right? So we have to take that into consideration. We also have to take a look at the tokenomics, we call it, right? What is the supply of those tokens? Is there a limit or is it unlimited? Is there a whole bunch that has been issued to the founders, which are going to be free trading, or are they in lockup? So there's all of these factors have to be taken into consideration, which are also specific to the token, along with the obvious things that you would have to look at as a normal exchange, listing a company or listing some kind of asset of value to ensure that people are buying into what they expect, meaning there's full disclosure of what's going on, a prospectus level disclosure.
Just want to add that I think it's really important to be aware, be cognizant of the fact that the existing rules and the clear answers and regulations are where the existing institutions thrive today. The gray areas are where the entrepreneurs thrive. This is what we're exploiting. This is what clients of ours are exploiting, companies I'm advising on are exploiting. We're not running around saying, we need an answer, we need these regulations or else we don't know what to do. No, we're going to do it. We're going to see what happens.
And I like to always use the analogy of like, Uber didn't go and ask the taxi authority if they could go and start the company, and Airbnb didn't go and ask the Hotelers Association if they could start doing what they're doing. And if they did, they would have got a big fat no, and we wouldn't all be being able to go on vacations and stay in cheaper places and cooler locations without all the overhead of a hotel. So I think, you know, despite my company's great interest in regulation, and we are interested in regulation, we wouldn't exist but for the people that took the risk to do this before there was clarity, before there was someone telling them what to do. And I think that startles a lot of the old school mindset kind of institutions and regulators. No offense, I worked at a regulator one time 18 years ago and survived it. You can too, but
sorry to be the buzzkill guy here, because like as I say, normally I'm the lead guy in the panel, and so going the other way with it. But look, if you're in the United States of America and you're issuing securities to the public without a prospectus, that's the second best way I know.
We're in Canada.
I'll bring it back to Canada. The second best way I know of going to prison, robbing liquor stores, is the first best way. In Canada, we don't send people to jail for securities-related matters. We do send them to jail for robbing liquor stores. But the point here is that, in fact, if you're in the securities world, we do, in fact, have very nicely defined, well-reasoned, framework to work within. My hats are off to the folks that are, have developed the technologies, pushed the envelope on the crypto space, and yeah, absolutely, those are the gray areas. But as I say, if any of you are planning to issue securities to the public, I would strongly advise you to do so with the benefit of a prospectus. Thank you.
So Richard, we touched on the regulatory challenges with STOs. When do you expect STOs to be listed on traditional exchanges? And I don't like to use the word traditional exchanges because they're
no, exchange actually is good enough. Come on, work with me here, folks. In any event, the reality is I'm still getting 3 to 5 calls a week from people that are interested in listing some kind of tokenized security. If I could wave a magic wand and have our clearing and settlement facility, which at this point is looking like will be a third or fourth quarter release in 2019, I would cut my heels together, wave the wand, whatever, and bring that data forward as fast as I can. So we're looking at probably about a year. We'll probably see some folks list them and use the conventional CDS clearing settlement system, but it will be convertible into a securities token on the FS or when date for the availability of the clearing settlement system.
So if I think about, sorry, I'm supposed to be talking into the mic. So if I think about, the major challenge from a regulatory perspective is investor protection. We've all seen the whole ICO hype from last year, over $2 billion raised, 3 to 6, I can't remember. But a lot of them are pump and dump schemes. So what should we be doing to protect our investors in Canada?
Prosecuting the shit out of fraud. It's already illegal. It's already illegal. We need to prosecute people.
That's the thing. We don't have that here in Canada. Like the U.S. is the threat because there is a real consequence to non-compliance. There aren't any consequences in Canada to non-compliance at this point. It makes people in my position, it puts people like me in a difficult spot because I'm sitting there crowing about all this stuff we need to do and regulations we need to follow, and everyone's like, okay, whatever. There's no penalty for this, for not following it. So it's hard to be, like I was saying in the back room as we were getting ready for this, like screaming into an empty forest, like, why do we need to do all this? Because it's the right thing to do, because the law says so. And there's no penalty for doing it. Everybody else is getting away with it. It's a harder argument to make.
How many pump and dump schemes were there last year that weren't crypto related? They were securities.
Exactly.
It's happening.
I think the main thing to prevent that and protect the consumers is the adoption by the broker-dealer networks, the stock exchange, and that ecosystem. Because when you give them when you give the investors a safe place to stay in and play in, then they won't go sending their money to some weird place, or somewhere country where there's absolutely no repercussions. So essentially, if you want to protect the consumers, you need to give them a safe ecosystem to play within.
So I'm going to keep the mics for the two gentlemen who have right now. And Jay, maybe you briefly talk about how some of the ICOs and STOs are, we could raise money globally, but securities laws generally are jurisdiction-based. How do you sort of deal with that, and how do you make sure, from a compliance perspective, that you're not going outside? What advice would you give to the others?
So this comes down to the exchange and making sure that they list the right kind of tokens. So if you listed a normal ERC20 token, then you may not have the capability to embed in the smart contract the preventative measures from making sure that it doesn't go to the wrong address. So for example, we have a shareholder and regulations require that the issuer has to have the information, or the brokers have to have the information of who are the shareholders for voting, for dividends, and for all these other reasons. So if you use the right protocols, for example, the ERC 884 is a protocol that Ethereum provides for smart contracts, then we can control this. So what we've done with the stock exchanges that we're working with is we write that contract for them that embeds all of these rules within it, and we designate signatories who can decide which addresses are whitelisted that can be sent to. So for example, because we're only dealing with the broker-dealer network, they've already done their KYC on their clients. So if a client says, hey, I'd like to withdraw this and I want to hold on to this token myself, well, the broker can whitelist that client and we can send those tokens to that address. Now, if that client decides they're going to try to send it to another exchange that is not regulated or is not supposed to be trading in that asset, then it's not going to work. When they try to transfer it, the smart contract is just going to reject the transaction. So this bottom line comes down to making sure that we choose the right technology when we're creating that token.
Just to go back and address the jurisdictional issue, I think that it's important to note that securities laws are different in every country, and generally they are based on where you are offering, not. I mean, we've had some changes to the rules earlier this year, but typically it's not. You could be based on the moon. If you're offering in the United States has jurisdiction to prosecute. If you're offering in Canada or Ontario has jurisdiction. So the global nature of it, because it's internet based, if you want to call it that, is still subject to those laws. So if you're doing a token offering or a coin offering or a token generation event that's going to be available for purchase in a country, the first question is, in which countries are you offering it? And then the second question is, what are the securities laws in that country? What does it mean to be a security in that country? And then number three is, does that matter if you're based in one of the jurisdictions that will prosecute you from where you're offering? So you have to look at where you're offering to, what you're offering, and if the place where you're offering from has anything, which is why a lot of them are going offshore, because those jurisdictions won't have, they don't care if you offer in other places. Their jurisdiction doesn't like it. But if you're offering to another jurisdiction, they don't mind so much. And so, yeah, and so it comes to, a jurisdiction shopping in some cases. And that's how you still have to deal with these legal issues. This doesn't, the global nature of it doesn't really solve any of that. Local regimes, legal regimes are going to be an issue. So if you're thinking of doing a ICO worldwide, you get legal opinions from every single country in the world, and that's expensive and time consuming.
And do you think maybe a follow-up question to that is, if I was doing an ITO or an ICO, would you suggest that we should go to the regulator and talk to them about it before you do something? Would that be through their Senate assignment?
It depends. I think you should first go to a lawyer and get a legal opinion on whether what you're offering is a security or not. And hopefully you go to a good lawyer who can advise you on not just if it is a security or not, but what you can do to make it not a security to avoid some of this stuff, or other ideas that that person might have. Like if they're an experienced person, they might recommend that you try to raise privately through the exempt market, or other more or less frictional ways to get you to a point where you are a decentralized platform, and then you can do an ICO after you're already not a security anymore.
So I'm going to ask Richard a question over here. There's been some proposals around control mechanisms such as surrogate tokens. What's your view on that? Maybe.
Well, again, we're getting into the deeply unsexy part of the plumbing, and again, some of the things that we've had to do in hijacking the technology from all of you bright young folks, for our evil purposes. Basically, to address a number of the issues around, not issuing wallets to individual investors, but instead the wallet would be had at the dealer level, and the information will be communicated to the dealer, and then the dealer will have to figure out how to integrate, to the client account updates, whether it's cash or the tokens. You obviously need something to be moving across that blockchain network. So instead of the actual tokens themselves, for which people will not be able to ask for, physical custody of that electronic asset, that electronic asset will actually sit in deep cold storage off to the side, and a surrogate or representative token will be used to update the blockchain. And the same issue, of course, happens on the currency side. The digital representation of currency has to move the other way in order to update the network.
Let's say we have about 15 minutes left for our discussion.
Perfect. I'd just like to add to that if you do want to hold your own keys and your own crypto, there will always be Bitcoin.
Thanks. So I'm gonna move on to enterprise blockchain. Amber and you can give us your thoughts on use of blockchain technology beyond cryptocurrencies and ICOs. If you speak to the users on blockchain, well, there's two sides. There's the crypto world and there's the other world who strongly believe in the power of the technology. So maybe you guys can elaborate on that as to what the power of blockchain is in the enterprise world and what applications you're seeing and where do you see that going? And maybe comment on where we are in Canada.
One of the big things I see coming, because I'm involved in the project, is with accounting. Audits are going to become a lot easier, because what's going to happen is you're going to have the auditor is going to come to look at a transaction. There's an invoice, and that invoice would have been written to the blockchain. And instead of them just looking at the piece of paper or that scan, which could have been faked or changed, you're going to have a confirmation from the other party on the other side who's also confirmed that they were also a party to that transaction. So you got the vendor and the customer both confirming the transaction. Then you have the financial transaction, which is the payment. Maybe it's Bitcoin, maybe it's Ethereum, maybe it's cash. And you've got that also being a confirmation. So basically the audit mechanisms or the auditing requirements are going to actually remove a huge amount of auditors out of the space, make it a lot more efficient, and certain auditors who actually learn how to use the blockchain and take advantage of it are going to become very effective and efficient in their job. We're also going to see like a huge amount of, I believe, with regards to the supply chain, for example, with foods, so that we can see exactly where it came from and all the steps that it went throughout its duration, so that we can understand, is the chicken that we're eating something that we just got fresh that was, killed a couple of days ago, or is it something that was in the freezer for 10 years? Because this is the stuff that's happening. So there's a huge amount of use cases for the blockchain, whether it's financial, which we're seeing, right, in terms of making sure that the ledger is immutable and is traceable and is transparent, so that we don't have banks making a run on people in their country, or whether it's down to the foods that we're eating every single day, or accounting. There's a huge amount of use cases for it, and we're just at the beginning.
I think right now there's a lot of things that people are looking at in terms of blockchain use cases that are going to be very pets.com. So they're either bad in terms of their execution, in terms of their timing, in terms of the technology, in terms of what they can actually accomplish at any one point in time. And pets.com, super failed website, now redirects to one of the pet stores. But what I think is really interesting is that there's a subscription service called BarkBox, where they'll deliver subscription products to your dog every month, which is awesome and super profitable in 2018. So I think that there's interesting things about the timing of ideas. And right now we have a lot of blockchain use cases that I think in 2018 are complete bullshit. I think, I don't buy food on the blockchain right now. The idea I don't think is ready, but at some point it will be. But the use case that I'm most excited about is the idea that when you have a lack of trust between parties and you need to have transparency, like a lot of my interactions with the government, I would love to see anti-corruption initiatives that involve more blockchain technology, where you should have transparency. So not where you should have personal information, because as an individual, You are entitled to privacy. But the government has a responsibility to transparency. And where you have that responsibility to transparency and where you don't have trust between your parties, I think we're ripe for disruption.
So you've actually tagged on to my next question. That's more so Aaron and Charlene is talking about privacy and GDPR, and the whole immutable nature of blockchain. You know, privacy is a huge concern, right, with customer data.
Yeah, so I'm the Chief Privacy Officer of Coinsquare, newly minted. I've been the Chief Privacy Officer of several, thank you, Amber, several financial institutions in Canada. So, I mean, once again, it's the same principles. In Canada, we've got the 10 PIPEDA principles of, you know, having accuracy and making sure people have access to and know what we hold on them, because at Coinsquare, you're required to undergo KYC, and we're required to keep certain records of your info, and you have the ability to consent to that, and you have the ability to opt out of some things, but most things you don't have the ability to opt out of because we need them by other laws that trump privacy laws. Now GDPR comes in and everybody's freaking out about it, but it's really not too far off of PIPEDA. It gives you a few more rights than PIPEDA does, but you know, Canada and the UK and the EU in general tend to be fairly similar on these things, and I think one of the questions that was probably circulating around earlier was about, you know, information on the blockchain. Now, financial information is listed as a piece of PII. Like your name, address, date of birth, phone number is, but that's not currently on the blockchain in the way that we're talking about it, at least for our exchange and for Bitcoin and Ethereum type purposes. So I don't think I can actually answer the question that was originally on this list of like, what do you do about someone's right to be forgotten when the blockchain is immutable? And if I could answer that, maybe I'd be a millionaire, because I could develop something that would be able to separate it out. And, you know, we could destroy that, but keep the rest on the blockchain. But I'm not a PhD in engineering. I just have a master's in criminology. So I can only really kind of speak to those things.
There are ways of doing it, but
Yeah, maybe Aaron can answer.
I think that was pretty good.
Thank you.
Okay, so I'm going to go back maybe to Richard and ask Charlene as well what your organizations are currently doing with blockchain technologies, how you apply them.
Yeah, I think I talked about you know, our program that we announced back in February. The technology is actually in our stack currently, and we're in the relatively advanced quality assurance exercise, and we are shortly going to open it up to the dealers and a few of the other folks in the food chain to basically get their hands dirty. And essentially, as I mentioned, it's a private blockchain, Ethereum-based, that will reside behind the securities industry firewall. So the networks that we use to communicate buy and sell instructions from the dealers and other information that goes back and forth. It's encrypted. There are advanced layers of network security. It's obviously not unhackable, but it's pretty good. It's really good. But, you know, again, there will be continued to be concerns, and in delivering this clearing and settlement system, it's going to be a key focus of the regulators that we'll have to convince them on the security issues related to it. As I mentioned, I think that we'll probably see folks elect to list tokenized assets before the system is available and clear and settle conventionally. In part because I think they want to get a jump on the rest of the world. I think there's some really, really interesting applications to the traditional securities world. We're going to see a number of royalty type products, for example, that are used commonly in private equity deals in the mining and the oil and gas space, come into the public markets. You know, very high quality securities backed by real assets that aren't in the public markets right now because it costs so damn much for an issuer to process a payment to a client. And by eliminating the vast majority of the friction there, as I say, we're going to bring a whole category of new investment opportunities to the investing public. And as I say, I think that's what really excites me about the next generation, not the plumbing, but actually having more interesting and compelling investing opportunities for Canadians.
Yeah, I think ours are just a little bit more simple, is that you can imagine we get approached probably daily, hourly by somebody who has a new solution that will help our trading platform with certain compliance elements or transaction elements. It's all on the blockchain. But, I think, we're always looking at these, looking to partner with them, looking to use them, but we haven't really found anything that has materialized, that has come to fruition. There's a lot of promises, there's a lot of talk. KYC on the blockchain, investigations on the blockchain. It all sounds really good, but we're not seeing anything that's come full circle yet. And one of the challenges I do find is that, when we get into the conversations, like, is it meeting current regulatory requirements or proposed regulatory requirements? And there's been all this solution building that misses like 3 aspects that you need to cover for regulation. Like, if you're building a solution that is supposed to be like a reg tech blockchain solution, at a minimum you should be reading and understanding the regulations and making sure that the product that you're selling does. So we're still always kind of looking for those solutions at Coinsquare.
So given the wrap up sign, but I'm gonna ask 1 or 2 last questions if that's okay.
Yeah, and then why don't we open up for questions to the audience after?
Absolutely. Yeah, so maybe I'll just ask the one question is, education, literacy has been pointed out to be one of the probably most important things from a blockchain perspective, because a lot of people still don't understand it. To a certain extent, regulators ask a lot more questions. If somebody was transitioning into this role, being a lawyer, engineer, accountant, what would your recommendation be? Where should they start?
Bring the skills to the table that you already have. Understand that we have tremendous open source communities. So open source means that your invitation didn't get lost in the mail. Get on meetup.com, get on GitHub, go to stuff, meet people, be genuinely curious, ask questions, and that transition will happen very fast. And hang out with Amy and Aaron and attend their fabulous events. They do job fairs, they connect people. So I found people in the space to be incredibly open, incredibly excited about their projects. And if you show up and just ask people about the stuff that they're doing, someone's gonna need an accountant, someone's gonna need a compliance person, someone's going to need lawyers. Lots of people will.
I'll go simpler and just say that there's a resource that we pass around, and I've even given it to my mother to read to try to explain to her what I do for a living now, because she has no idea. It was hard enough explaining it before, it's even harder now, anti-money laundering and cryptocurrency. But just a website called, and again, depending on what your level is of understanding, called lightpaper.com. It really breaks down into 4 sort of bullet point blocks of short and tidy information, and for those with the ADD generation, if you're new and getting into it, or your kids are looking into it, it's kind of that friendly type of reading.
And for those who are not of the ADD generation, we have a textbook coming out soon, Q1 of next year, Blockchain Law and Cryptocurrencies, published by LexisNexis, so it's for law schools and business schools, and it's a good primer on all these issues. So it's called The Law of Blockchains and Smart Contracts in Canada, practical guide. So that would be good help, a good reference.
I would say just look for a problem in the existing career that you're in. For example, accounting. Why does it take so long? Audits are stupid and long.
It's a good thing I didn't introduce my full self. I'm traditionally also an audit partner, so I totally forgot to screen the participants before.
How could it be faster? How could it be more efficient? How can the blockchain help us? How can the blockchain make me more powerful at what I do? That's what I would ask myself, and then just dive in.
Richard, any concluding remarks?
I couldn't be more excited about the space. There is an awful lot of overhype at the moment, but I think the impact on just about every segment of Canadian business in the medium and long term is frankly understated. And I think it doesn't matter sort of what area of interest you've got, what business you're in, you better keep your eyes open and join the community, learn as much as you can, ask a lot of questions. And as I say, I think the opportunity for learning is just incredible.
I just want to also point out that Transformation Works has curated all of the discussion questions today, so clearly they know a thing or two, I would either talk to Barry or look up Transformation Works with an X, and then that's more of the a full course for you to get involved in. Just wanted to put that in there.
But when I say I come to look pretty on the podium, that's what I really truly means it. So I'm going to open it up to the audience to ask some questions. So if we say your name, where you're from, and what your questions.
Would you like a microphone?
Maybe stand up.
My name is. Hi, my name is Anthony. I'm a blockchain consultant. I help projects in different parts of the world. And my question basically is Canada going to be business friendly for blockchain? The image I hear from international clients is maybe. And the US is definitely not business friendly at the moment. And places like Hong Kong, Singapore, Switzerland, maybe London, the city of London, are definitely seen as business friendly. So I wanted to ask your comment on that.
I would say it definitely will be friendly. We have all 3 stock exchanges very aggressively moving towards their own solutions and within the blockchain to support the trading of tokens. And when you have the stock exchange with the broker-dealers all supporting it, it's going to get the support of all the investors. And when you have that, now you have the foundation for everything else blockchain to come into the picture. So, you know, with what we're doing with Blockstation is helping to support that transition to make sure that the stock exchanges, the depositories, the broker-dealers, all of them have the technology and the tools that they need in order to support these asset classes, these digital assets. And that is going to be the trigger point that's going to make it friendly for technology people like you to make sure that you can bring your talents to the table and, you know, bring Canada forward.
I think we need to distinguish between blockchain and cryptocurrencies generally, because right now what I've seen, especially over the last 8 months, and a lot of clients, new clients that have come through the door, is we're not dealing with ICOs really. We're dealing with private enterprise blockchain solutions that can be adapted for that use, a secure, immutable, unhackable way of conveying information as well as wealth. So the cryptocurrency thing may or may not be, you know, treated by regulators in different jurisdictions in different ways, but blockchain technology is being embraced on the by private enterprise very, very aggressively right now.
And I would say, you know, be a little weary. The regulations that the government is putting in place right now, in all the discussions that we've had with the Department of Finance, have never been intended to stop this kind of development of blockchain. It really is more focused on this exchange-based activity, trading platform-based activity as it relates to the currency, and not blockchain applications outside of that. So they haven't been overly clear about defining that, but people like me and Amber have been putting a lot of pressure on them to be very clear about that so that there is no confusion. I mean, we don't want Canada to be left behind in this revolution of blockchain because of some poor chosen wording and regulation. Poorly chosen.
Yeah, I would add that, you know, around maybe a month or 2 ago, the government asked for comments on their sort of digital transformation, and we provided some comments on blockchain. And not just that, there are other, I won't call them lobbyists, but people like Tom Tapscott and the Blockchain Research Institute are talking to the government about how they need to start adopting this new technology eventually, because once the governments begin to invest into it, then you'll see the public thing. But I do hear your point in terms of how Singapore actually subsidizes, for example, any blockchain-related projects. They actually pay for people to come over. You know, I think that's the sort of investment you want to see from the government going forward.
But let's be fair, Canada's never been a leader, they're always a follower. So this should be no different in terms of where we are in terms of development of blockchain or cryptos or
I couldn't disagree with you more.
Well,
in the securities industry, Canada led the way in decimalization, floor closure, electronic trading, like all of these things, way ahead of the Americans. And in this particular space, we've got some clear advantages to early adoption of these technologies in the space. So you're going to see us way out in front of the folks in the US.
I'm happy to hear that, but my experience, I've not seen that. In the industries I've worked in.
I've worked 30 years in this industry, and I'm telling you, we've been ahead of them every step of the game. We have to be. We're smaller, and we have to be more efficient and more innovative in order to preserve our little, few acres of snow north of the border.
I'm gonna back Richard on that one because, and maybe some of the panelists may or may not agree with this, but our regulators are progressive in their thought. Don't forget, we've actually had 2 ICOs approved in this country.
Wow, a whole 2 of them? Oh my God, that sandbox is really working overtime.
I just
As
say
opposed
that
to none.
the regulatory sandbox had a reputation among my clients early on as being the witch's cottage in Hansel and Gretel. Where it's like, come in, we have candy, we have food. And then they go in and they bring a hammer down on them. And that's
you never hear from them again.
No, and they're never heard from again. That's the end of it.
You're being kind, and I appreciate that, but I agree with you, sir. I'm sorry I don't remember your name. Maybe in the securities market that we've had some developments, but Canada has not been known to be a leader when it comes to technology, embracing technology. We sit and wait and watch what the US is doing, and that's exactly what securities regulators are doing right now, is watching what the SEC is doing, and then maybe we'll react the same way. That's my opinion.
We're allowed to agree to disagree.
Not that of my employer, mine. Yes, you're allowed. It's a fun panel when we can disagree. If I all said the same thing, you wouldn't learn anything.
It just means you're buying shots after that.
I'd love to see us be
It's an
more
open bar.
progressive though, because sometimes I find it a little heartbreaking to see ideas that start here, that were minted here, that have foundations elsewhere, that are run from elsewhere. So I think that as a nation, we should be striving to be a jurisdiction that our businesses that were founded here want to stay in.
Yeah,
I think that's noble.
Yeah, and my CEO has made very public comments about exactly that. Coinsquare is a Canadian company. We're proud to be a Canadian company with like full Canadian employees. And if they make it too difficult, I don't know what that means for the future of Coinsquare in Canada.
Any other questions in the audience? I think we have time for one more. We have George.
Well, I'm George from balancenow.ca, and my question pertains a bit to the topic of on-ramps and whether or not these trading platforms and what they sell qualifies as securities and should be registered as such. So the way I look at it, there's definitely an investment of money, and there's definitely, you can always identify a subset of customers that have an expectation of profit, whether or not that comes from the managerial efforts of the third party and whether or not such representations were given. So for me, it's a matter more of, is there any commonality that gets established over here? And I've been seeing, and some of those tests revolve around, if we look at a specific token, like what's the level of decentralization that was achieved here? Was there a pre-mine? What are the representations that the people that created the token gave to the participants? I've been seeing some of those emerge organically with these trading and exchange platforms in the form of digital asset selection frameworks, some of them public, some of them not. My question, which was a bit long-winded, but I have to present all these qualities. My question would be, is anyone on the panel aware of any initiatives in Canada, whether a non-profit or research institute, that would like to take those digital asset selection frameworks, centralize them, standardize them, present the findings to the regulator to hopefully come up with a better test than the Pacific Point test, and maybe in the meantime lobby for some kind of self-regulating status like Japan?
There are lots of those. They're all over the place. There are lots of different organizations, federally and provincially, that are lobbying for this kind of change. But to answer your question, like your original thought process that was going through about how are we going to get to the point where we determine that a token is not a security, it's really for the courts to decide, and we haven't had a challenge yet. So we're waiting for, it's a matter of interpretation. There's a lot of interpretation happening now by the regulators when they're prosecuting. So it's not happening by the public, we're just sort of capitulating. So until somebody wants to be a test case, does their ICO in Canada, gets prosecuted by a regulator, and then challenges it in the courts, we're not really gonna have a definitive answer for that, because the legislature's reactionary. Legislators don't say, oh, this might happen. What's that?
They don't say, let's make a new law.
No, they don't say, hey, I have an idea, this might work, let's try it. No, what happens is a bunch of people get burned, and then they establish a new rule to prevent people from getting burned. So we have a regulator in place for that. They're saying, okay, let them do their job. They're going to do it, and if someone challenges it, they need to change the regulations and maybe the law as well.
Would you see value in centralizing those digital asset selection frameworks and presenting them to the regulator?
That's, what do you mean centralizing, like having a coordinated or a concerted effort among all the lobbies? But not everybody agrees on how that's supposed to be done. That's democracy, unfortunately. We have a bunch of people who think they know how it should be done, and then presenting these ideas to the government, and until there's a groundswell, you know, it's not going to be a loud enough voice, but we'll see.
All right, so I think we're done. We don't want to be holding up people from the bar.
Does anyone have a last question that we can wrap this all up with, or shall we start networking? Okay.
Let's say there's a couple of transactions from like Al-Qaeda or like people trying to send their money from Iran to Canada. How quickly would that make the regulator say, okay, this is done, I'm not going to.
So are you talking about a sanctioned individual? Because you can send money between Iran and Canada, but not if you're a sanctioned person or not for specific purposes. So I think that really comes down to who is the recipient of that transaction. Did they have a duty to make that type of determination? Did they know, or should they have known? And then what happened? So it's going to be very dependent on what that is. If the answer to that is that I had an online store and I'm selling handbags, and a sanctioned person sent me Bitcoin and I sent them a handbag, should I have known that they were a sanctioned person? Probably not. If I'm selling AK-47s, that's a very different story. If I'm a regulated platform, that's a very different story. So it really depends on the context in terms of what's happening. And if you think that at some point you've done that transaction, if you have that moment where you look back, regardless of your business type, and you go, oh geez, I just realized who Kim Jong-un is, and I probably shouldn't have sent him that thing, even if it's a handbag. That's the time to talk to a lawyer. That's the time to see what you can do after the fact in terms of that transaction. And if you don't know, if you suspect that that's happened, there's actually mechanisms for voluntary reporting to let the regulators proactively know about it and pass that information to law enforcement.
I'll just add one last quick thing. The terrorism angle is often, I think, a red herring thrown into this cryptocurrency business. Now, I'm not saying that terrorists haven't used cryptocurrency, but they also use money. So they're going to keep using money because it's easiest to use money. Yeah, and you know, when you talk about a platform like ours, we screen all of our clients against all the lists. I can't say that every platform does that, or that they're screening the right lists in the right countries in which they're operating. But I think that comes back to one of the questions earlier: who's enforcing this, and who are they looking at, and who are they going after? Canada does not enforce its sanction regime in any meaningful way possible. Now that's about to change. There's some new rules coming out about that. And if you're a money service business, despite some loophole in the criminal code that they forgot to close, you are responsible to screen for terror lists. So, you know, again, if you're a compliant exchange, you probably want to be doing those things. If you're not, I can't really speak to that.
Just by show of hands, can I just see how many of you guys in this room are in the compliance or risk department or work with the regulator? Just by show of hands. Okay, awesome.
And who are the regulators?
Wow.
So,
They walked away as soon as I said they were progressive. They were like, oh, that's it, we're out for the day, check mark.
so what I'd like to say is the blockchain is the future. Okay? This is going to empower you in what you're doing with your job. When we go and we talk to brokers and financial institutions, they're really excited. The sales guys are really excited. Oh, you know, this is the new thing and we could, you know, make so much money here, but the compliance and risk guys are shutting us down. I want you guys to understand that when you're talking about AML, the blockchain is your best friend. Okay? The worst thing that you could ever do is try to launder your money through the blockchain. through a Bitcoin or something like that, because it's completely traceable, completely auditable, and eventually it's going to catch up and you're going to be able to figure out exactly where that came from. In the future, retroactively, you'll be able to figure out that a transaction 3 years ago that came to your client, which you thought was good, actually came from some terrorist activity. The blockchain is your friend, so please learn about it, embrace it. We have the tools for you to utilize. Get trained, learn, embrace it, and everything is going to be amazing.
So he started off with a $100 note and ended very passionately. That was very well done. So I think that's time. I wanted to thank all the panelists, Jay, Charlene, Amber, Aaron, and Richard. Thank you, Amy, for organizing such a great event and transformation excellent projects.
This was a really great event, a really great discussion. Thank you, everyone. We had a full house on a Monday night, so we couldn't be happier. Your food and your drinks are paid for, so please stick around and talk to one another, meet some people, network, grow some business, and have a nice time.
That was fun.